Let me start by welcoming the audience and the distinguished speakers at today's webinar that we as Consob are very honored to host. A few words on the aim of the webinar. Regulators worldwide are dreaming of a world in which, before an initiative is taken in the economic space, it is evaluated in terms of the impact it may have in the medium to long term on the environment, the society, and what it implies in terms of governance. In this context, in particular, the European Commission politically committed to make Europe the world's first climate-neutral continent by 2050. In addition to recalling what the most important steps are under the agenda of regulators, this webinar has the ambition to give prominence to a retail investor's perspective. Because if it goes without saying that issuers and financial operators are the principal actors to make the dream come true, somehow it seems less clear that investors, both professional and retail, also play a very important role. Especially for what retail investors are concerned, on the one hand, this would need to be accompanied in a process of increasing awareness on what their needs are in terms of ESG. On the other hand, they need protection against frauds and greenwashing in particular. In both cases, it is clear that financial education has a prominent function. This is the reason why this webinar falls within the initiatives in the annual World Investor Week promoted by IOSCO. And I'm just proud to say that in organizing this webinar, we succeeded so far, at least on one point. We realized a perfect gender balance. If you don't believe me, check on the program. I'm leaving now the floor to Erik Tedin, Director General of the Financial Services Authority of Sweden and Chair of the IOSCO Task Force on Sustainable Finance, who will take us through some background on the IOSCO engagement and work in this area. Thank you, Erik, for being with us today.
Thank you very much, Martina, and thank you for inviting me to this seminar. It's a great honor for me to be here, and for sure, World Investor Week is an important event for also us here in Sweden and many other around the world. Let me just first say that if you think about the financial sector, banks and mutual funds and insurance companies in their own living has a very, very low carbon footprint. So we're not talking about, of course, it's important also for banks to look on their own carbon footprint, but you should not forget the important role that banks, insurance companies, mutual funds, and others that forms the financial sector, they're a crucial role in pricing risk and ultimately channel savings into investments. That's what we are here for. And of course, the regulators are here for safeguarding, in the end, the public interest. So let me first say that for sure, climate change is for real. If there were anyone that were in any doubt, I think the recent report by IPCC clears the picture. It's now clear that changes in climate could be seen in every region of the climate system and of course around the globe. So that is also a key message, I think, to the financial industry and to regulators and for that matter, IOSCO. Climate change is global and we need a global solution. If any country, region, or city gets carbon neutral, that's fine, but in the end, we need to work on global solutions. And what funneling or challenging capital through the financial sector and pricing it correctly, I think could be seen as we're actually trying to bring the future into the present, to price future risks into the current price and hence get the investments in the right directions. So what we have been thinking about, and we'll go through that a little bit more in detail at IOSCO, is what could we bring to the table. And pretty soon it was clear that disclosure on the corporate level is key. Disclosure on the corporate level is key to get investments from equity investments, for example, into companies that go for a more green future than the one that goes for a brown future, i.e. to avoid to invest in companies that have a very, very weak prospect because of the increasing risk and price that will follow on if you have a great carbon exposure. So the whole issue of information was key when we started this work. So essentially, I think you better and more data, it harder will be to mislead investors, including retail investors. So if you are keen of avoiding greenwashing, which of course we all are, well, then you need to start with having the correct disclosure on the corporate level. We've also been working there specifically on greenwashing in the mutual fund industry, and also on ratings. Ratings, an industry that, of course, have gone into the whole green finance business and providing ratings. And what we were trying to find out, could these ratings reliable, and could we send any signals from the global regulatory arena? So in 2020 has, of course, been a very, very special year, a corona year, if you like. In that year, we have seen a continuous rise in the role of ESG finance, with more and more products going into ESG, which you could say is fine. But again, the devil's in the details. Are these various products really green, and are they actually also contributing to a better future? What COVID-19, I think, have shown on a more broader, in a more broader sense, is that you need to have resilient business models. From having business change with when you get your supply into your business model, but of course also more generally. So having a more resilient business model, I think, goes very, very much hand in hand with ESG. If you build a business model that could handle, let's say, a COVID-19 pandemic, then that business model, I'm sure, will also be more ESG friendly. So why should IOSCO, the global regulator for regulators, if you like, the global organization for securities regulators, why should we be in the area of ESG and climate? Well, we do represent 95% of the world's securities markets. We regulate 95% of the world's securities market, including the real large ones, and for that matter, small ones. So we are a truly global organization. And as I started to say, global risks need global solutions. I think that sets the scene. So we have a unique position. We actually have an arena where we could discuss among colleagues common areas of common interest. When we started to look in the sustainability finance area, there was some discussion whether, should we really interfere? Should we really have a role to play here? Interestingly enough, a lot of the response we got from the industry was saying, we need you to be an active part of this, because we have so many different voluntary standards that this is becoming much more of an alphabetic soup of standards. And also the risk is that you will see cherry picking. So one company will choose one standard which make them look better, and another business company will choose another standard which then will make that company look better. So the cherry picking, the uncomparable kind of nature of these standards, not auditable, and with a fairly weak input from the public interest, were actually the reason why many stakeholders were saying to IOSCO, please come and play an active role. And so we have done. So we are now working on 3 work streams. As I said, disclosure on the corporate level, we're working heavily together with the IFRS on asset managers and greenwashing, where we'll come out with recommendations, and also on ratings then. The IFRS is, of course, a well-known, let's say, financial disclosure organization. What they are looking into now is to build a second leg. So not only financial disclosure, but also sustainability disclosure under the acronym of ISSB. So that's very much now in its founding, and we'll see what that leads. But I think we will actually have such a leg of the IFRS pretty soon. And that will form the kind of governance structure of disclosure of sustainability related issues. So that's, and then you can say, well, what's the IOSCO role? Well, we have a role already now in the monitoring board, so in the governance structure of the IFRS. I think that's extremely important because then we get the public interest into that governing body and the kind of structure that sets the standards ultimately. We also work closely with some of these private initiatives that were around the alphabetic soup, if you like. Many of them have done a great job in establishing good standards, but now as we're looking for more harmonization to have more of one standards, of course IFRS needs to work together with these standards that are already out there and trying to get them to join forces, and we also as IOSCO need to be part of that cooperation. What we are trying to achieve is to have more of consistency, get away from the cherry picking, and make it more comparable. So we have three principles when doing this. One is that it should be a global standard. Again, global problems, global solutions. The other one is that it should be a building block approach. So if you're in one region thinking, I want to be more ambitious than the IFRS or the ISSB, as it will be called in the future, well, then you could actually say, well, okay, I have it as a baseline. I have the ISSB standards, then I build a new additional standards on that. That could be that you would have more of double materiality, or that you want to go into more social issues. So again, it's a building block approach. And we have said that we will start with climate first, because that was maybe the easiest in a way that it's clearly a global issue, and also an issue where it's fairly easy anyway to get a common understanding within the IOSCO framework that this is something we could work together. We also want to have what we call a running start, which means that we will build on existing structures and standards. One is that IFRS is an existing governance structure, and also that we work then, as I said, closely with the 5 existing standards. And we do this not only on this high flying level that I may be representing now, but also on a very, very technical level. So we have a technical expert group that works closely with the standard setters and basically scrutinize what they put forward in order to get the best possible standards. And we are now looking forward to the COP26 in beginning of November, and hopefully IFRS and ISSB standards will be more concrete, and also our input to that will also hopefully be more concrete. Again, I will touch just briefly on the 2 other legs. One is on asset managers and greenwashing. I think greenwashing is an extremely big problem. Now it's a risk that everyone wants to portray them as green, and the risk is that they are doing that and basically fooling their investors. So I think it's extremely important that we have right standards, that we have scrutinized these different disclosures. This is done already in many regions, including the region where I come from, Europe, but we need to do more on a global side. So we will put out overriding kind of guidelines for regulators in that. We're looking into naming, how are mutual funds named, and is that corresponding to what you actually are delivering? Again, if everyone say they are green, are they actually green when you look into their investments, and what does it actually mean? And then finally, the ratings. The rating industry has of course picked up on the trend of green finance, and they are selling a lot of rating products. They also are extremely dependent on the disclosure on the corporate level. And again, we also need to think through whether the rating standards and how they are set up are strong enough. And we all have in fresh memory the problems with the ratings industry at the global financial crisis 2008. So of course the ratings and the role they play here, which is important, that it's played in a correct way. And also that we will present a report in November around. So let me summarize. Financial markets is about channeling savings into investments. It's about bringing the future into the present price. So then we need correct and good disclosure, and we need to do that soon, especially on the climate climate issues. We have a very, very strong momentum in the work we do, not only because we are working hard in the teams in the Sustainable Task Force, but also that it's a lot of momentum around us that actually want to do something better. And it just look on every day commenting, for example, in Financial Times, and you see that there's a lot of engagement from large investors to issuers to banks. So it's not the lack of will, but it's to get this in the right way. And here I think regulators have a very, very good, an important role to play. So hopefully what we do will in the end make us more carbon neutral than we are now, because that's extremely needed if mankind should survive. Thanks.
Thank you, Eric. Time to start the first panel now. Just waiting for all the panelists to be on screen. Thank you. Just waiting for Jean-Paul also to join. Okay, here we are. We'll have an initial tour de table in which all speakers will present their thoughts and experience in the field, which will be followed by an open debate. In the interest of time, I'm not going to recall the housekeeping rules, which you all had the chance to visualize when accessing the platform, except for reminding that any question from the audience to the panelists are welcome and may be sent by the Q&A facility on the platform that you can see on the right side of your screen. Allow me now to introduce the first speaker, Stefano Cappiello, who is with us today in his capacity as Director General of the Banking and Financial System of the Legal Affairs Directorate of the Italian Ministry of Economy and Finance, and who will present us also the interesting experience of the Italian presidency of the G20 and the impacts that the sustainable finance had on the agenda of the G20. So Stefano, the floor is yours.
Thank you, Martina, and thank you to IOSCO for inviting me and the Ministry of Economy and Finance to this global webinar on sustainable finance. Allow me to start by flagging that I'm not wearing the tie, not out of disrespect for the audience, but in strict adherence to sustainability principles. Unfortunately, it's very hot in Rome. Maybe it's one of the output of this climate change, so I prefer to turn off the air conditioning and not wearing the tie. So today, I want to start with a general remark and an appreciation of how this seminar has been structured. Panel 1 is about policy and regulatory intervention or framework. The second one, so it's how to facilitate market to work properly. And the second one is about financial literacy. Now, I will not elaborate, of course, on the financial literacy part. It's for the panel. But I just want to remark how it is key that investors have a growing knowledge about what is a sustainable financial product. We can and we are trying to improve the supply side of information, but investors and asset managers also need to be need to upgrade their knowledge about this product, and as a consequence of that, also here at the ministry we have a financial education committee, of which Anna Maria Rosati will tell you about later. So I'm here with a very brief remarks on the role that sustainability played in the Italian presidency of the G20. And you know that we have put sustainability at the core of our presidency agenda, not only in the financial sector. Sustainability cuts across all the three pillars of the Italian presidency program, which is indeed targeting people, planet, and prosperity. And this has been, and as I said, sustainability has featured high in all of these areas. Now, focusing on the finance track, and I would kindly ask to move to the second slide. I have prepared 2 slides. Now, when we have set the program of the Italian presidency, we thought that it would have been important to reopen the Sustainable Finance Study Group. And I think the setup of the Sustainable Finance Study Group is a very important achievement of this presidency. The Sustainable Finance Study Group has now been upgraded to a fully fledged G20 working group and is chaired by the United States and China. As it was remarked before, sustainable finance is a global issue, and we need global solutions to this. And the fact that this working group is now chaired by United States and China is a good omen for the output that will be coming from this study group. Now, Sustainable Finance Study Group working in the past months and is about to present in the upcoming meeting of governors and Ministry of Finance its deliverable, which will be comprised by a synthesis report of what the study group has been doing during the past months and a multi-year roadmap on sustainable finance. Now, the synthesis report, as I said, is presenting the works that have been provided by all the international organizations which feed the Sustainable Finance Study Group. And I take this opportunity to thank the IOSCO for the very important inputs that we have received in this work. The very important piece of work is the multi-year roadmap on sustainable finance. With this piece of work, we intend to set up a multi-year work program, which will be based on evidence that are collected year by year, and will be a living and flexible document. Living and flexible document because, of course, it will change over time according to the evidence that will be collected every year regarding the milestones that are set up in the work plan. And the multi-year roadmap is based on sustainable finance, and it starts on the E of the ESG acronym, the environmental part, but it will start being focused on the climate part, but over the years will expand its scope also to the social part and to features regarding biodiversity. So the E, the environmental part, is not only about how to get to climate neutrality in alignment with the Paris Agreement, but it will over time expand also to other aspects such as biodiversity. The roadmap will be presented next week, so I don't have time and I cannot spoil the presentation of the roadmap, of course. I would kindly ask to move on to the next slide. Just let me present you the 5 areas on which the roadmap will be built and broken down. And the first one, we would have to move to the next slide. The first area will be about what is being called the alphabet soup or the bubble tower. As the previous speaker was saying, we have moved from a situation where we had too little about sustainable finance in a world where probably we have too much. I mean that we have different ESG taxonomies around the globe. ESG, we have different rating system, different verification models, different way of labeling. Now, we all know that private markets work well and efficiently if they can work on reliable, comparable, credible information. And in order to do that, we need then to get to a level of global standardization that is definitely has to be higher than we are now. So the first focus area will be on how to identify principles of comparability and interoperability among these different taxonomies, ratings, verification tools in order to avoid the adverse selection risk that is called greenwashing. The second area is linked to the first one. It's about the information that need to be provided by issuers of sustainable financial products. Here again, we are in an area where we don't have a common baseline, and the chair of the IOSCO task force recalled us that there is a very promising initiative being carried out by the IFRS Foundation, and the Sustainable Finance Study Group, is embracing also this initiative as an important stepping stone to provide a common global baseline. This does not prevent regional approaches that can build up on this baseline in order to foster certain aspects that are more needed in certain areas, and also does not mean one size fits all. We need to keep in mind that the cost of producing this information varies, and the incentive to produce and also the return on this information varies according to the size of the enterprise. Very important area, this one as well. The third one regards how sustainability risks can morph and do morph into financial stability risks, from a macroprudential point of view and from a microprudential point of view. This is an area where supervisors, central bankers are deeply engaged, and the Sustainable Finance Study Working Group stands ready to provide its input. Fourth area is about the role of international financial institutions, including multilateral development banks, in order to support, to facilitate the channeling of private resources, sustainability goals. We know that we have a huge funding gap if we want to finance this green transformation in Europe and across the world. So public money will never be enough to do that. This is why sustainable finance is so key also from a social point of view. In order to help this private channeling of resources, one lever is an appropriate regulatory framework for information, as I just said. Another one could be also partnering between private and public resources. The last area is about cross-cutting issues, such as the digital innovation. We just mentioned how it's important to allow investors to get a grasp about what is financial products, digital means will help demand to meet with the supply. So it's a big opportunity for financial sustainable finance instruments to be presented to the investors. Is also a risk because investors might not grasp, have an understanding of, might not be able to judge whether the product is a real sustainable finance product or is the byproduct of that adverse selection called the greenwashing phenomenon. So also on this area, on digital innovation, again, we need to work in order to reap the opportunities and tackle the risks. I will stop here and thank you for your attention.
Thank you, Stefano. Just a reminder from my side to try to stay in the 5 minutes speech. Otherwise, we're going to have a debate too short, and I mean, it could be a pity. Now, let me introduce Andrea Beltramello, who will speak today in representation of the European Commission as being member of Cabinet of Executive Vice Presidents Valdis Dombrovskis. Thank you, Andrea.
Good afternoon, everybody. Thank you for inviting me to speak in this panel. Unlike Stefano, I am wearing a tie because in Brussels today it's very cold, although it's sunny. So I think we're more in the mindset of turning the heat rather than the air conditioning. But still, we need to speak about sustainable finance and our sustainable finance agenda, which is more important than ever, actually, to reach our Green Deal objective. And it has become even more important with the ambitious package of measures, which we call Fit for 55, which the European Commission put forward just before the summer to meet our climate neutrality objectives. And we know that meeting these ambitious targets will not be cheap and will require massive investments. And we have known now for a long time that public money will not be enough for these investments. So we need to rely on the private sector. And I think with our sustainable finance agenda, we've been successful in creating long-term signals to channel these investments into green activities. I think it's also fair to say that in the EU, we have been front runners in this space, but it's clear that we need to go further still. And this is why in July, the European Commission adopted a new sustainable finance strategy to address the challenges that we have to meet these extra investment needs, and also to take into account, I would say, the new global context, which has become more and more important, and it's shaping more and more how we are thinking about sustainable finance here in the EU. This strategy is very encompassing, but here today I would like to focus more on the topic of the day, which is investors, retail investors, and risk of greenwashing. So how we can make sure that individuals and households and savers can contribute to this agenda, and they can do so in a way which is safe for them. And that's why transparency and disclosures is such an important part of this agenda. It has been a very important part, and it continues to be. I think we have already done a lot to increase transparency. I will start by saying that we have designed the first classification system of green activities, which is the taxonomy. I know that other countries are working on taxonomy. Stefano also mentioned it, but we've been the first to do so, to create this common language that investors can use to make sure that their funds really go to activities that have a positive contribution to climate and environment, in a way to sort the green from the greenwash. And based on the taxonomy, we have developed many other tools to improve transparency on financial markets and for investors. So first, the rules on how financial market participants disclose their ESG investments to their clients. And also related to this, the rules that the Commission has adopted on clients' green preferences and how these are considered by financial market advisors and insurance advisors when they sell their products. We have also made amendments to the rules on fiduciary duties so that financial entities really take into account these climate and environmental risks in their mandates. We have also proposed rules to improve the way companies report on the social and environmental aspects of their activities, including how the environment and social aspects have an impact on their activities, but also how their activities have an impact on the environment and climate and social aspect, because in the EU we really have this double materiality perspective, which is very important for us, and which somehow is setting us a bit apart from other jurisdictions. We have also come forward with the voluntary green bond standard, an EU green bond standard. Again, this will help to fight greenwashing, so recognizing those bonds that really can be considered green in the market. And finally, we have adopted rules that companies have to follow when they provide information to investors about the alignment of their activities with the taxonomy. And again, this will help to prevent greenwashing. So as you see, we are really putting in place a whole regulatory framework which to a large extent really addresses these concerns of greenwashing and really make sure that investors have true, strong, solid information on the greenness of their investments. So lastly, a few words on the international dimension. It's clear that our strategy goes beyond Europe. We see that there are many very encouraging developments. For example, the Sustainable Finance Working Group in the G20 that Stefano mentioned, which obviously already includes a lot of the work streams that we've also been working here in the EU. It's clear that global cooperation is key in this space, also because the international context has changed. And we have seen with the pandemic that we are stronger when we address some challenges together, not in isolation. So I think it's fair to say that Europe has opened the way on sustainable finance, but we see that many others now are willing to follow us and to work with us. I think we can work on common ground taxonomies, we can work on common ground disclosures. It's very important that we do that together. And I think it's important that we have a baseline, a common ground on which jurisdictions can then adapt their rules to their national specificities, or they can go beyond and be more ambitious if they wish to do so. I think this could be a good model for cooperation internationally. And this, I think, will be also the direction of travel of the Commission. For example, what we are taking in the international platform on sustainable finance, where we are already working together 17 jurisdictions, like-minded jurisdictions on these issues. So I will stop here. Martina, thank you again for having me, and I look forward to the panel discussion. Thank you.
Thank you to you, Andrea. Now let's listen from Jean-Paul Servet, who's chairman of the Belgian FSMA, as well as vice chair of the IOSCO board, co-chair of the monitoring group, which oversees audit-related standard setting, and even more than this, is chair of the IFRS monitoring board, which oversees the IFRS Foundation, who you all know plays a very significant role in achieving a globally agreed standard for reporting from issuers. So, Jean-Paul, the floor is yours now.
Can you hear me? Can you see me, Martina? Is it fine for you?
Yes, it is fine. Thank you.
Thank you. Okay, so first of all, allow me, Martina, to thank you for your kind word I don't deserve. And thanks also to you and to CONSOB for inviting me for this very important global webinar, especially in, I would say, during the IOSCO World Investor Week. It's a good tradition to take initiative at level, and thanks to you and to the CONSOB. You asked me, Martina, to stress or to put the accent on the need for a global coordination of corporate ESG disclosure in order to protect investors and reduce greenwashing. And this is exactly what I intend to tell you with, I think, the starting point of all this challenge, which is quite easy for me, but also very interesting, I would say. First of all, it's a demand-driven exercise. Most of the time, people like us, I would say supervisors, are asked to think about lessons to be learned from a crisis. This is not the case here, which is absolutely fascinating, I would say, because now the starting point is, I would say, a demand-driven challenge, not only from institutional investors, but I would say most of the time from John and Mary in the streets. So it means citizens, consumer, investment in all continents. And what do they are asking to the political decision maker, to the regulators? It's quite easy to stress that. First of all, a global framework. So please, no alphabet soup. And it was already stressed rightly by Stefano Cappiolo. And I think, Stefano, I can tell you that what we are doing at IOSCO level is exactly in line with the expectation from the G20 Italian presidency. So the investor is asking a global framework, no alphabet soup, no competition between all the committee of supervisors, and that's exactly what we are doing at IOSCO. Andrea, I was very happy to hear from you. I would say that the international agenda is as important as the open one, and that's exactly what we are doing. I would say a building block approach and no competition for that. So in order to be able to reach all these objectives at short time, which is also a very important aspect of the framework, we need for that a strong governance. And that's exactly what we are doing at IOSCO level. And it's a real pleasure for me in my capacity as IOSCO Vice Chair, but also as Chair of the IFRS Monitoring Board, which oversees, as you rightly stressed, that some seconds ago, Martina, the IFRS accounting standard setting. And it's very important for me to stress that because I would like also to say that I can report on behalf of IOSCO that the demand for consistent and comparable sustainability reporting standards is high on the agenda. And the reason for that is very important to stress. Just because, in fact, investor demand for sustainable investment opportunities and thus for comparable and comprehensive corporate ESG information is a global trend observed since a couple of years, not 10 years, not 15 years, but the last year. It's impressive to shift that in the behavior, not only from the side of the institutional investor, but also from John and Mary in the street. And there is today a clear investment demand for global coordination on ESG disclosure and greater international alignment on ESG-related corporate disclosure will increase global transparency and serve better investor protection and reduce greenwashing. So it's a mixed blend of positive but also negative aspects. Because if we don't take action in order to avoid greenwashing, it can be a very difficult point because we are speaking about trust. And if we have accident, it means that the trust will disappear in the capacity of the financial sector to deliver and to sell products which are in line with ESG factor. And that's very important to say. And if I may tell you just one small story in Belgium, I have from time to time to refrain some initiative from the private sector. I think I'm the first one to say self-regulation. Why not? Good idea. Until the day that it doesn't work anymore. Then we have to shift to something else. But at the same time, I have to explain to very interesting people would like to develop a pure Belgium agent. Look, I think that the first important, that's the international and the open agenda, which means that the expectation from the investor community are about, I would say, a global framework and no alphabet soup. And besides, frankly speaking, I had the pleasure to read, like everybody, even of course, I was involved also in the discussion with the G20 working group, for instance. It's a real pleasure for I would say, the IOSCO representative and also Eric, who's taking the floor before, that the initiative for the creation of a new international sustainability standards board under the IFRS Foundation umbrella is supported by IOSCO and welcomed by G7, G20. and I would say only in 2 months' time, which is absolutely unbelievable, I would say, for the open. So it means that's a way forward. And one key aspect that IOSCO has considered in articulating its vision for a global comprehensive corporate reporting system are the governance aspects. Not only about technical apps, of course, quality is for sure very important, but also about governance. And frankly speaking, we have to admit that we have to repeat every day in our life, and that's what I'm doing in my life, to say, look, ISB, it's not only about some accountant working in a room in London. There is a very, very impressive, I would say, a governance structure. And that's important for the credibility. If we want to convince the G20, the Italian presidency, the European Commission, and other decision makers that there is a sound corporate, we have to explain. Allow me in a few seconds, Martin, to explain how it works. First of all, I think that I may say that the IFRS Foundation enjoy a well-tested governance system with 3 tiers. Firstly, it's about the technical aspect, a technically competent independent board following best international due process, and a transparent and consultative process to set the global standard. Then, a board which is overseen by what I would like to call a multi-stakeholders board of trustees, chaired now by Erkki Liikanen, the former well-known European Commissioner, Minister of Finance, and a central banker from Finland, responsible for the oversight of the standard setting process, for nomination, for setting IFRS Foundation strategy. And last but not least, I'm sorry to say that like this, at the apex, I apologize for that, of the governance system, there is a group of public market, capital market authorities that enhance the politic accountability of foundation. It means, I would say, national supervisor. It means, for instance, the European Commission. It means, for instance, the Minister of Finance of China, and as observer, the Basel Committee. And I have the pleasure and I have the privilege to chair this group, which is called the Monitoring. And the success of this governance system, let us try to present that like this. I think it's also linked to, I would say, the quality of the governance. It's a real fact-finding, evidence-based approach. Just by stressing the fact that if IFRS standards are now, for the time being, already implemented in 140 jurisdictions, it means that all the jurisdictions believe in the capacity and the quality of the success of governance system, which is absolutely not easy to explain, because in some jurisdictions there can be a link between the computation of the accounting result and the computation of the tax return, and we know what it means for the national budget. And IOSCO has approached its work on sustainability disclosure following the success of the revamping of the IFRS Foundation in 2000 and its endorsement of the IFRS accounting standard for use by IOSCO. So it means for us a day-to-day dialogue, and it will be, for instance, the case with the trustee this afternoon. We've been in close dialogue with the IFRS trustee as they've designed the various phases of the sustainability project. What does it mean? Let us be clear, in order to avoid not only to come with high-level comment. Well, what does it mean, I would say, the progress of IFRS project? First and most important aspect is to stress that the IFRS project is to establish the so-called ISB under the IFRS Foundation. So not a copy and paste, but another board than the ISB. And for the time being, there are 6 important approaches in order to be able to have a successful approach. So it means, frankly speaking, a comprehensive approach. It's about governance, it's about technical preparation, it's about funding and location, it's about nomination and board composition, consultative committee, and last but not least, the building approach, which is very important also with the link with the European agent. What does it mean, governance? First of all, to be able to explain in a transparent way what you are doing to all kinds of public stakeholders. Can I just stress the fact that the IFRS Foundation received a little bit less than 200 comment letters for all the aspects and the constitutional change to give effect to the ISB under the IFRS Foundation. Frankly speaking, I think that there are many people individually knowing how it works. Public consultation, at a bit less than 200 comments, it's a real success, I would say. And again, I think it means a translation of the support expressed to the 2020 consultation paper and the establishment of the ISB. The trustees are expected to agree the final changes to the constitution at their meeting of October. So it means in a little bit less than 20 days. So it seems every day there is a new progress, I would say, in the ambitious roadmap, including consultation with the monitoring board I am chairing, and this will allow the formal consultation of ISB. One comment about the technical preparation. Does it mean that we have to start from scratch? Well, something which is really challenging in this work is, and that's a main difference, I would say, with what happens with the switch to the IFRS standard 20 years ago. 20 years ago, we had many bad students, I would say, for the quality. Now, most of the time, we have excellent students. The European Commission was able to launch a very ambitious program, supported by 27 member states, which is not, as you know, Andrea knows better than I, the case every day at European level. The same in other jurisdictions. For instance, in the US, they have excellent standard setting bodies. So the objective is to join the effort. And for this, and if we want to accelerate progress and convergence in global sustainability standards that meets the need of the investor in the world capital market, the new board would best build on the well-established work of existing international initiatives focused on enterprise value. The reaction of the trustee of the IFRS Foundation was therefore to facilitate technical preparation for the new board by creating a working group. That's what they call the Technical Readiness Working Group, which is a group of organizations with existing expertise in sustainability and integrated reporting standard setting focused on meeting the needs of investors. Again, not to avoid to work in an ivory tower, to join the efforts and to see what are the best practice from different jurisdictions and from other countries. And from this point of view, I think that I may say that work is progressing so that it can provide technical proposals for the new board to consider and have a running start to its standard setting. So this group is expected to finalize the draft prototype climate standards, and it's not, of course, a surprise, before COP26 in November of this year, with input from IOSCO. And the priority package, that's the name of the pilot project, will include a climate standard prototype, a presentation standard, and a conceptual set of conceptual guidelines. And this preparatory work would provide a basis for the proposed ISB to consider in preparing its first exposure draft of proposed standard. And then after the new board deliberation, the new ISB, the other board, I would say, independent from ISB, it is anticipated that the exposure draft would then published somewhere in Q1, maybe Q2 of next year, with a standard being released in mid-2022. And the new board would begin with climate, which is not a surprise, and its work would be expected to move with pace to consider other sustainability-related issues important for enterprise value. And last but not least, this group is planning for the appropriate transfer of technical expertise, content, and resources. Let us be clear. We need to work with people who are specialists in all this area because it's a new world, a new terra incognita, if I may say, from this point of view. And the objective is to facilitate consolidation, sustainability disclosure, standard setting. And this is also a key work stream for coordination by the trustee and at all levels at the monitoring board. Funding allocation. I think that you know that a number of key jurisdictions have publicly expressed a commitment to fund the IC effort. Frankly speaking, very successful, I would say, output, and with some jurisdictions showing interest in hosting the new board. And this is also an important step for the IFRS Foundation. And through the monitoring board, again, we will ensure that the trustee apply due diligence and principles of transparency and fairness in their consideration of the proposal. Again, another aspect, nomination board composition. The monitoring board is involved in the selection of the chair of the new board, and the monitoring board will participate in also Consultative committee, important. And last but not least, Martina, because I know that time is running. I see that you have to be nervous.
I'm going to ring the bell. I'm so sorry.
Yeah. And due to the fact that you are in Europe, in Italy, in Europe, sorry, it's important to give some final comment about the building approach, the building block approach. In IFRS IOSCO view, I think it's important to stress that the new proposed IFRS Sustainability Board standard should provide a globally consistent and comparable sustainability reporting baseline. It was also stressed by Stefano in his slide number 2. And why is it important? Because I think that if we believe, and that's my case, in this building block approach, we will allow jurisdiction to go further and faster if they wish, while retaining cross-border comparability. We know that the speed won't be the same, I would say, in all continents. It was stressed recently, rightly, by Sean Berrican, the Director General of DG FISMA, saying we will need to manage some differences, but at the end of the day, we know the objective. And individual jurisdictions retain the right to choose whether and how to incorporate the new standards into their own requirement. And in this respect, I believe that there is consistency between what I am used to call the IFRS IOSCO approach and the EU proposed CSRD. And the Commission itself has clarified that new EU sustainability reporting standards should aim to incorporate the essential element of globally accepted standards currently being developed. And the proposed EU standard would build on and contribute to standardization initiative at global level. And this will also require, let us be clear, constructive two-way cooperation between EFRAG, with a lot of expertise at the level of EFRAG, for instance, and also with the support of Asthma and relevant international initiatives. But it means that 2022, it will mean a lot of trains arriving at the same time in different stations, not only in IFRS, but also at EU level, because the first set of reporting standard will be adopted at EU level by the end, correct me, Andrea, by the end of next year, 2022. And from this point of view, and knowing a little bit how it works for many years at European level, I was very fascinated by the capacity of the European Commission to put in the recital 37 of the draft CRD directive that, and I'm quoting the work, the draft of your colleague, Andrea, that standards of the European Union should take account of any sustainability reporting standards developed under the auspices of the International Financial Reporting Standard Foundation. Correct me, but it doesn't happen frequently that a European initiative refer to other initiatives at global level, which is fantastic. I would say that's an excellent starting point. And due to the fact that IFRS sustainability standards are expected to consolidate it, but not only consolidate, but then to go ahead and taking a starting point, existing private initiative, it is indeed in the interest of the EU legislator to pay due regard to the IFRS-led consolidation in order to facilitate the transition of issues that already use existing standards. So that's very important, and also the fact that CSRD Bill of Rights. So it means that there is a coalition of institutions, of people of goodwill, and that's exactly what I would say investors are expecting from us. I think that we are on track. The devil, of course, is in the detail, I would say, but I think that if everybody can be on board, and it will be also the case for the auditors, I have also the pleasure to be the co-chair of the monitoring book with the chief accountant SEC. Don't forget the auditors, they will have to play their role about, I would say, external agents. And I think that with a comprehensive approach at global level, I think that's the best approach. Sorry for being so long, but as you know, Martina, we need to be ambitious if we want at the same time to achieve, I would say, two main goals of the ESG corporate reporting: protecting investors, avoid greenwashing, and fostering global ESG capital flow. I will stop here.
Yeah, we know, Jean-Paul, that you could carry on talking on these topics for days, but it's now time to give the floor to Natasha Kasanov, Executive Director of Asthma, and no need for me to say how important is Asthma in the realization of the European Commission agenda in this area. So, Natasha, please.
Thank you so much, Martina, and I'm delighted to be here. Jean-Paul, your passion comes across very clearly when you speak about these topics. I'll try to be as convincing as you have been and my predecessors on this panel. Thank you again, Martina, for the invitation. I'm really delighted to participate in this event. As was recalled for us, it's really important to be able to contribute to these efforts for raising awareness for investors and having the focus, for one, looking at this topic that has many angles to it, looking at it from the angle of the investor and how can we make sure that the investors, when they come to these products, they receive what they are promised to receive. So for me, really important, very topical and timely, this conversation. Thank you again. I think what we've seen, I very much agree with what Jean-Paul said at the beginning of his intervention, that it's interesting how this phenomenon is developing, that it is driven by a very strong shift in the appetite of investors. Investors, all kinds of investors, so civil society, but also retail investors all the way through institutional investors are expressing a very strong appetite and demand for sustainable products. And this has happened in really just a few years. So there's a challenge for all of us in the global regulatory community to keep pace with what's going on and tailor our responses and the framework to the needs of these investors. So I think here what I wanted to touch upon today, you've asked me, Martina, to say what can ESMA contribute to the European agenda, how we're going to contribute. I will just say a few words and then I'd like to focus on a key topic for the investors. So first, of course, we very much support the international efforts for consistency, covering all aspects, and therefore I just wanted to commend again the work done by IOSCO under the leadership of Eric in relation to the whole value chain. So looking at corporate disclosures, through to asset managers and investment fund products, and all the way to ESG ratings. We very much commend the work that has been done in a very short amount of time at the global level. If we look then at the European level, it's very interesting to see this ambitious agenda. ESMA is a very strong supporter of the Commission's proposals. Andrea walked us through all of them. How can we contribute? There are a number of areas there where in the European Union's renewed sustainable finance strategy, ESMA can contribute. And this goes all the way from providing an opinion on corporate sustainability reporting standards to potentially having a responsibility to oversee the reviewers of EU green bond standards, green bonds possibly, and then also looking at technical expertise, so providing some input on standards to clarify the rules and the framework, but also looking at what credit rating agencies do and how they incorporate ESG factors into their methodologies. So a very broad array of areas where we can intervene. But this is generally the discussion we have when we talk about institutional investors. What I would like is to take a step back from this technical angle, not look in detail at the different regulations and rules that we're developing here in the EU, where it can easily get very complex and fall into what was called the alphabetical soup, which is terrible, I think. But really take the angle, take a step back, look at the broader picture, and what are we trying to achieve for the investor at the end of the day. That's why today, if I may, I would really want to focus my intervention on what was described already as the key area of risk for all us in the regulatory community, which is greenwashing. And if I have a few minutes, Martina, you'll tell me, I'd be happy to touch upon two other issues that are relevant that have not been touched upon yet, which are capacity building and risk monitoring and generally looking at the trends in the market. So first, if I can focus on greenwashing, I just wanted to emphasize how important it is for us, because as we see this very strong increase in demand and appetite, at the same time we have elevated risks, of course, of greenwashing, because as the market is trying to respond to this demand and shifting the entire product range to make them sustainable, there's a very big risk that in doing so, at the speed at which this is happening, that some of the products that call themselves green are not so green. And so we see already today, even without necessarily any bad intention in the first place, that some products are calling themselves with similar names, but in fact delivering very different outcomes. And so it's our responsibilities as market regulators to come out and clarify, to make sure that there is a match between what the producer is promising to the investor through the name or through the investment strategy and what actually then is happening on the ground and the actual investment strategy that is implemented by the manufacturer. So when we look at this, a number of ways that we can operate to fight against greenwashing. In the EU, there are a number of initiatives that have been mentioned by Andrea already to try and go in that direction. For example, we have this Sustainable Finance Disclosure Regulation that focuses on disclosure, making sure we have the transparency, which is, of course, the direct mirror of greenwashing, making sure it's clear what is being promised. And here we're trying to clarify a bit better what exactly should come in the disclosure that is given at the point of sale to the investor. Extremely challenging exercise, because when you try to reconcile the complexity of what we're talking about, E, S, and G factors, putting them in plain English in a concise format, at the same time making sure it's digestible for the investor at the end of the day, we found that across the product range that has actually turned out to be extremely challenging. But that's one angle, trying to make sure that at least from a disclosure transparency perspective, we're being transparent. There are other initiatives in the EU, for example, in the area of product governance or suitability that also Andrea touched upon, trying to make sure that in the interaction between the advisor, the manufacturer, and then the end investor, there is consistency in how this is designed and then tailored and marketed then to the investor. A final area that I wanted to mention is in the area of ratings, where again we are calling for a regulation of the ESG data providers, because if we can have more clarity and rigor in the way this information is disseminated in the market, then when it is used by market participants, we will reduce the risk of having very divergent views or information that may not be robust in the market. So we're really calling for some kind of framework and oversight of the ESG data providers, not to interfere or to standardize the methodologies, but just to clarify that information has to be reliable, consistent, robust, and transparent for different market participants. And finally, really the greenwashing itself. It's a big concern for us here at ESMA. The figures were not mentioned, but we have so many demands, so many products coming out. We see that in some countries, the managers are saying that 80% of their product range is sustainable. Then we need to make sure that that actually matches the reality. So here, what we are going to do with the national competent authorities in the EU, we're going to work together to try and make sure we have a common understanding of what actually is distributed on the ground, practical cases of funds being promoted, what are the national initiatives in each country to try and deal with these issues, can we find common ground on definitions, and we intend to use the entire toolkit at our disposal to try and promote further convergence. That is perhaps clarifying rules, it can be guidelines, it can be Q&As, or looking at potentially having something a little bit stricter, or potentially going all the way to investor warnings, so that we can actually use the whole toolkit and try to promote further convergence. The question at the end of the day is transparency sufficient? And that is something we'll have to consider also, because we don't have that many labels. And again, it seems the market has gone so fast that now the diversity of products proposed to investors does not always allow him or her to make an informed decision at the end of the day. So we will be working on this, very high priority for ESMA here in the EU going forward. And if I have 1 minute, Martina, I just wanted to mention these two other initiatives that I think are important if we're looking at the subject from the angle of the investor. Just capacity building. What we will be doing also is making sure we can continue to make efforts to put regulators in the same room so they can share experiences, discuss, and see how we can improve our understanding, because this is actually a new area where, from a skills perspective and a market development perspective, it's going very fast, it's quite specific, and not everybody has the knowledge. So making sure we have that forum for conversation, the same as there's the IOSCO Sustainable Finance Task Force. In ESMA, we have a network of regulators on sustainable finance. We'll also be working on trainings and webinars and trying to contribute to general awareness, and of course financial literacy that will be dealt with in another panel, I understand. And the final point is on risk monitoring. I think it's important that all of us, precisely because of the speed of this development, because of how massive this shift is, we need to continue to do analytical work and monitoring of trends in the market, so we remain on top of these developments, and if need be, we can adjust. So all the policymakers that I've discussed today and all the regulatory community internationally that we have, we bring that data, that information to the table, so we can actually see on the ground what are the figures, what do we see, and how do we need to adjust in our different roles to make sure that we come up with, if possible, a framework that is as robust as possible. Just to close, what's really important, and Jean-Paul said it very clearly, is all of our efforts here, and not just to have like a very nice framework that is consistent globally, but really at the end of the day, we need to maintain trust in the system. We are lucky that we have such strong appetite from the investors. They want to contribute to this transition. They want to invest in sustainable products. So it's our duty in the regulatory community to make sure we can maintain that trust and ensure that those products deliver on their promise.
Thank you very much, Natasha. Now, finally, happy to give the floor to Tanguy van der Werf, a voice out of the chorus in this regulatory panel, if I may say. Tanguy is a Director General of EFAMA and board member of the International Investment Fund Association, who will give us the point of view of the industry on these very interesting topics.
And thank you for the opportunity to share some of our views. May I ask you, how much time do I have left? Because do you have a hard stop in 5 minutes or in 4 minutes even, so that I can maybe, manage my own time?
If you can manage to stay in the 5 minutes, you can use all of them, because that was the minimum that we wanted to ensure everyone.
But will there be a Q&A afterwards, or no time?
We'll try to have some Q&A session. Some Q&A in any case, even if I see that for the time being, no questions came from the audience. But I would really like to have a debate, because I also personally have some curiosity, and I'd like to ask something to you. And I will probably start from you, Tanguy. So if you can manage to take your initial speech in 5 minutes, so you will have the chance to speak afterwards.
Thank you, Marina. Let me maybe first start by stating the obvious, that we and our members, we very much welcome the Green Deal, but also the Sustainable Finance Package and its 3 main building blocks, consisting of the taxonomy, the disclosure frameworks, and the development of benchmarks, labels, and standards. And we usually welcome the EU leadership on those issues. The fight against climate change is a priority, it's a necessity, and the Sustainable Finance Package is a good way to help finance and accelerate the transition. It also, let's be clear, it also represents a huge opportunity for our industry. It's an opportunity to further develop this kind of finance for good, or finance with a purpose. And I think that asset managers can really play a very important role by engaging with the investee companies, and also through their voting policies. It's also for us and for our members an opportunity to attract a new type or a new generation of investors, more eco-conscious investors, if you wish. And indeed, it's an opportunity to develop and launch new products to meet this increasing demand for sustainable investment products. And of course, this comes with the risk of greenwashing, which I hope we can discuss a bit more in detail during the Q&A. So we are very supportive, but this is not always all plain sailing, if you wish. I think there are still a lot of moving and sometimes missing parts. At times there is a lack of coherence, and there are quite some inconsistencies between the different pieces of legislation, especially regarding the implementation timelines and the whole sequence of it. There are so many interconnections between the taxonomy, MiFID II, CSRD, SFDR, the eco-label, and these cannot be neglected. The reason I make this point is that, in some cases, our industry will simply not be able to comply with some of the new requirements. If I take the SFDR taxonomy-related product-level disclosure requirements, which are kicking in on the 1st of January next year, 2022, clearly in the absence of the level 2 measures, and in the absence of investee company disclosures, it will simply not be possible for our members to disclose the proportion of taxonomy-aligned assets already as of the 1st of January. And our role, is to support the efforts of the Commission, but also to flag those issues, because we want to ensure that what is being proposed and adopted can indeed be implemented effectively by market participants. At the same time, we acknowledge the complexity of the entire exercise, and we are in this together. We need to act quickly, in concert, and this inevitably comes with imperfections. So apart from those kind of missing level 2 measures and the fact that we need time to implement those measures, what we need to play our role of channeling savings and engaging with investing companies can be summarized as follows. We need common and clear definitions, and this is precisely what the taxonomy is all about. This is the building block, the first building block that we need, and we very much welcome the inclusion of transitional activities in the taxonomy, and we look forward to the future extensions of the taxonomy, which needs to remain science-based. When it comes to the EU eco-label, we need an EU eco-label which does not have too strict requirements, precisely given the currently limited scope of the taxonomy and the need to ensure proper diversification for the benefit of investors. Very important for us also is the need to avoid fragmentations. What we have seen in some member states is the development of some national doctrines, and these are undoubtedly well-intended because they aim to avoid greenwashing, something that, as I said, that I hope we can discuss later, but those national doctrines are simply not helpful from a single market perspective. Likewise, all these national eco-labels, they are well-intended, but they may constitute a barrier to entry for those asset managers operating cross-border. And I very much welcome what Natasha Kasanov just said, i.e. that Asthma and its members, will work towards more supervisory convergence when it comes to the interpretation and application of all these new rules. This is very much needed. We also need enhanced corporate disclosure standards. Many speakers mentioned that point. We fully concur. We need ESG data that is meaningful, forward-looking, this is key, available, comparable, standardized, audited, and provided in a digital format. And all this will allow us to better integrate ESG consideration in our processes. So we are extremely supportive of the proposal made by the Commission for a CSRD directive. We also very much welcome the development by EFRAG of sustainability reporting standards. This is a huge opportunity for companies in Europe, which will have a single reporting standard. And as main users of that information, we find it important to be associated to that work of EFRAG, and we will most likely seek an EFRAG membership in the coming weeks. Mention was made of the double materiality, which we fully support. Likewise, we support the establishment of a European single access point. International convergence of corporate disclosure standards was mentioned a couple of times. This is absolutely key. If we don't get any convergence, what you will end up with in Europe is ESG funds with a huge bias towards EU companies and large caps, completely lacking diversification and with no exposure to emerging markets where growth can be found. So this would not be to the benefit of investors. We very much like the co-construction approach that EFRAG will be taking, and we look forward to the establishment of this ISSB in November on the occasion of the COP26 in Glasgow. But we need to be realistic. This global convergence will take time. And therefore, I think Jean-Paul mentioned it, we need to minimize divergences. We need to recognize it will take time to converge. And in the meantime, we need to find a way to minimize divergence and manage them. Finally, we very much welcome the proposal made by AMF and AFM to come up with a regulatory framework regarding the sustainability-related service providers. I think this is very much missing, and we believe that if we do all of this, we will manage to unleash the full potential of sustainable finance. And as far as EFAMA and its members are concerned, we will keep engaging with policymakers to achieve all those objectives. Martina, I will stop here, hoping that we can discuss a little bit more about greenwashing during the Q&A.
Yeah, thank you, Tanguy. But I just heard that Andrea unfortunately cannot stay with us too much time it needs to leave. So I differently than I promised before, I will start with Andrea. I have a couple of questions for him before he leaves. All of you touched upon greenwashing, and it seems to me that it is a very important topic, especially talking about sustainable finance, but from a retail investor perspective, as said at the very beginning. So I would like to understand from you, Andrea, how is the Commission going to address greenwashing in the new sustainable finance strategy? And if you may also say something more about the next steps in the EU taxonomy, because you also recalled in your initial speech that this is something on which we have several initiatives in different jurisdictions, and there was since the beginning this idea to revise the initial framework with a view possibly to extend the taxonomy. So it would be very interesting to listen from you what the main ideas are in this context, even if you don't, I'm not asking you to spoil any possible future strategy from the Commission.
Yes, thank you, Martina. Thanks for starting with me with this round of questions. I'll try to be brief, and then I'll try to stay as long as possible so to listen to the rest of the Q&A. So to answer your questions briefly, I think on greenwashing, what Natasha said, I think it's very much aligned with the thinking of the Commission, also in the new strategy. So as I said, we have done already a lot on increasing transparency and disclosures. I think this was really the cornerstone of what we've been doing so far, but we need to do more. And it's a lot also about enforcing and implementing. So also to touch upon something that Tanguy said, that we have a lot of different national approaches, and sometimes these are not necessarily consistent, and this is not maybe to the best interest of the investors. It's not only about, let's say, making life more difficult for the fund managers, for example. It's really about the investors. So we think there is merit, for example, in taking stock of how much more we can do to lead to more convergence at EU level in supervision of greenwashing, and whether we can have new powers, for example, that we can give to supervisors. So if there is already enough in the supervisory toolkit, both for national supervisors, but also for EU level supervisors, or if we need to do more in that respect. So I think this is something that we're very keen to explore and to see whether we can make further progress. And then apart from the supervisory and enforcement angle, there is also, I think, the rulemaking will have to continue. We have done a lot along the value chain, as Natasha put it very eloquently, but there is more to do. And I think also in our strategy, we single out precisely this point about ESG rating, where we see that there may be scope to improve also the harmonization of approaches, and in particular, the minimum standards that these ratings and their providers need to follow. Regarding the taxonomy, so indeed we have now already a big milestone, which has been achieved by the Commission, which was the adoption of the first taxonomy on climate change, mitigation and adaptation. And now it is with the co-legislators, Parliament and Council, for them to hopefully bring it to a successful conclusion of its, let's say, gestation, so that we can have the rules in place by 1st of January next year, as it was originally envisaged. And we are working in parallel on many other work streams, so we will have to complete the taxonomy with the 4 remaining environmental objectives next year. But we will also need to continue working on the current climate taxonomy to understand to what extent other energy sources could find a place in the taxonomy. But again, this has to be based on science, as Tanguy said. And we really need to keep this science-based approach, which is very important. And we also need to think more about the transition and how the taxonomy or something else maybe can help to the companies that are not there yet, but they want to get there and they need financing to get there. And I think this will be also one important focus of our work going forward. So the transition aspects of the framework. And then, of course, we will be continue to working also on the expansion of the taxonomy to new objectives, which is something that we will report on by the end of the year. So on social taxonomy, for example. So these are all this is all work that is ongoing in parallel, and we will try to keep it as consistent as possible, as Tanguy was advocating, because obviously this is the cornerstone of many other tools and rules that we're putting in place at the same time. Thank you.
Thank you, Andrea. Now, before moving to a slightly different topic, we can address, for instance, fragmentation and work ongoing to define a global standard for corporate reporting. I would ask Tanguy to comment on what Andrea just said, and if possible, to provide specifically for an industry point of view on the current situation. I mean, under the current SFDR provision, what do you think are the major problems in being really able to curb greenwashing?
Precisely, the purpose of SFDR was to improve transparency and comparability of disclosures to help fight against greenwashing. What we are seeing in the market, so to speak, is that there is a bit of confusion concerning this classification between Articles 6, 8, and 9, and in the sense that the market is using this classification de facto as a label. And this is problematic because this can lead to unintentional greenwashing. And this is really an issue. Of course, it's still early days to make an assessment about SFDR, given that some of the level 2 measures still to be finalized. But it is concerning because then you have a difference between expectations, between what the client expects or understand from the product and what the manufacturer or the distributor expects from the product. So I think this is a major issue. The clarification by the Commission of what promotion means under Article 8 of SFDR did not solve anything. I think that there are so many ways that asset managers can understand Article 8 and therefore classify one of their products as Article 8, that if this classification becomes a label, then we have collectively an issue, because I think, as Jean-Paul mentioned, greenwashing has to do with trust. If we want to increase retail participation in capital markets, we need trust. If we want to further mainstream sustainable finance, we need trust. And there is a trust issue about using this classification as a label. It's not supposed to be a label at all. So I think that what we need to do is first, asset managers need to walk the talk. That's obvious. They need to do what they say they will do. But this is not enough. We need SFDR disclosures to be meaningful and understandable. This is absolutely key. But yet again, it will not be sufficient. We need financial education. And I think this is the topic of the next panel discussion. So we need to make sure that investors understand what they are buying. For example, if there is a clear difference between investing in a company that has a positive impact on the world and having oneself as an investor a positive impact. Likewise, best-in-class all company stocks remain all company stocks. So people need to understand that. ESG integration is a very broad concept. So I think it's important that investors understand what they are buying. And more fundamentally, we see a huge role for distributors. It will be extremely critical for distributors to play their role by asking for the sustainability preference of their clients. Of course, this will be mandated by MiFID II, but the key for us is that advisors should ask why the clients are interested in sustainable investments. And by understanding the reason why, they will be able to avoid recommending sustainable investments that do not meet their clients' underlying aim. And there might be very different reasons why you as an investor would want to invest in such products. It can be you want a lower risk, you want more performance, you want alignment with some of your personal values, or you want to have an impact on the world. But those are very diverse reasons. And so unless the distributor knows why the retail investor wants to invest in those products, we will not be able to avoid unintended greenwashing.
Thank you, Tanguy. I believe that for the time being, we can consider other 10 minutes before moving to the second panel, but I would like to give the chance to every panelist to have a second chance to speak. So women first, let's start with Natasha. You mentioned a number of different initiatives that Asthma may take in order to contribute to the realization of the very ambitious goals in the area of the sustainable finance. But specifically, I would like to ask you your views on the current status of disclosures convergence at international level.
Thank you, Martina. There's some problem with the mic. I just want to, I don't think there's much I can add to what was said before, and I have to say I really have to leave, unfortunately. I just wanted to maybe react to what Tanguy just said on the greenwashing. I think we're very conscious that there's not only voluntary greenwashing, and I don't even think there is any of that. The greenwashing we are concerned about is the non-voluntary one, is the misunderstanding. So there could be misallocation of capital or lack of trust precisely because investors, they think they're buying a product that has a direct impact that is going to change the situation of some sort. But the reality is, no, it's just ESG integration. So it's better than the product next to it, but it's not going to change the world fundamentally. And I think that's something that we need to convey, we need to clarify. And in the EU framework, we've gone a long way, but we're not there yet. And precisely, we've created some confusion completely involuntarily as well by trying to provide flexible categories of products for disclosures, but then at the end of the day, they have been used in a different way, as you're saying, and so now we have in the same category very different animals, very different types of products, and that can create an issue. So I think early on, as we're all aware of this, we need to find practical ways of solving that issue going forward. And just to close on what you were saying, Martina, before I leave, and I apologize because it was a really enjoyable conversation. Just to reiterate what others have said, ESMA strongly supports the efforts to have international consistency, global challenge, global market participants, and therefore we need to be able to find mechanisms that make sure that we have, even though they will not be completely aligned frameworks in different areas, sufficiently consistent coordination between the different frameworks in different jurisdictions. As this is going really fast, we ensure very close cooperation between regulators so that the frameworks are sufficiently aligned to allow for divergences tailored to regional differences, but that the baseline remains solid and internationally consistent. With my apologies, I have to leave now. Thank you so much, Martina. Thank you for the invitation.
Don't worry, everyone. Please feel free to leave if you need it. Now I will turn to Jean-Paul because I'm sure he would like to add something on what just commented by Natasha about this need to ensure convergence at a global level. Can you hear me? Because I'm experiencing a not very stable connection. I just turned off my video. But Jean-Paul, I wanted to specifically ask you, what is your view about the consistency between the IFRS IOSCO building block approach and regional initiatives such as the use proposed CSRD, on which we also listened from Andrea before?
No, I will be short because I was at a bit already too long, I would say, in my comment taking. But I think that the point you are making, but also I would say the comment made by Natasha and by Tanguy are very important. If we want to avoid greenwashing, first of all, we need to avoid any kind of competition between us, I would say. Us means the community of regulators. So I think that even it's look like in a comic strip, I would say Europe, I would say, is on track, and especially with an agenda about product design, rule of conduct, and information to be released by asset manager, banks, insurance broker. IFRS, I would say IOSCO is, I would have a focus, of course, about information to be published, released by listed company with the debate about the scope, materiality, and other aspects. But I think if we want to avoid greenwashing, we need to acknowledge that sustainable finance is now, in 2021, very popular. Everybody support. It was not the case before. Times are changing. But the problem that I see, the challenge, is that many CEO of banks, many CEO of insurance company, many CEO of asset manager are very supportive until the day that they realize what it means for them. Okay? And we don't have to think that all of them know what it means. Most of the time, it's not the case. So my duty as supervisor, vice chair of IOSCO, and also national supervisor, member of Asthma, is to repeat myself every day, to explain again and again to CEO of banks, brokers, because the scope is very large. And look, be careful. Don't underestimate what it means for you, the implementation of SFBR, all kind of regulation, because the example taken by Tanguy is a very good one. I think, like Tanguy, that's maybe a source of misunderstanding. Times are changing. It means, for instance, that in Belgium, we see that the kind of management of UCITS, which are very popular, it's changing. For the non-European members of the virtual room, Article 6, 8, and 9, and Tanguy was referring, it means in European law, it means that Article 6, business as usual. There is no change in the management of your investment. Article 8, it means that you take into account some objective linked to ESG. That's what we could call, I would say, green, light green. Article 9, I would say it's dark green. I would say the DNA of the investment policy, it's about ESG implementation. What I could tell you in Belgium, it's two kinds of element of language. I could tell you, I think that we were one of the first NCA members at ESMA level to release a study. Well, look, in March of this year, 51% of the net asset value are now in line with Article 8, 45 Article 9, and only 4% business as usual. Say great. Belgium, FSMA are excellent, outstanding. But be careful, as stressed by Tanguy, it's only, I would say, a declarative statement. Only on the basis of information filed by the asset management. The Belgium supervisor, the FSMA I'm chairing, is not yet allowed to check, to challenge. And it's not indeed, as stressed rightly by Tanguy, a label. So people would see everything is under control, but we know that this, I would say, target are moving target, because we know that, I would say, the level of requirement released by the European Commission and what we call taxonomies, plural, and the new binding standards to be published are not yet endorsed. So we are still waiting for our toolkit. So it means that in 1 year, some of these UCITS can lose their Article 8 of 9 compliance of intention. So that's a very tricky issue, and please don't underestimate it. So I think that financial education is also for people in the financial sector. We have to educate a lot of CEO. Maybe a bit arrogant what I'm telling you, but please don't think that everybody is aware of what it means. I'm the first one to say, maybe on non-politically correct, sustainable finance, it's not about nice picture. Okay? It's about a real change in the investment policy and the capacity of all issuers to explain what they are doing and to which extent they think that they are in line with it. And it's a moving target. That's, I would say, that will be the tricky aspect of next year. Next year, first standards to be published by ISB, and the last range of standards to be published at EU level. That will be a key aspect.
It's really a pity that two questions came from the audience just this time, too late, unfortunately, to ask them to the speakers. But I'd like to mention the kind of implied messages in these two questions. On the one side, it is recalled that corporate reporting standards should come first to ensure a proper, coherent and reliable data are available to end investors. And the second question points to the needs to start working on the other two objectives, not just the environment, but also social and governance, with a particular emphasis on the social part. So unfortunately, as said, there is no time to ask panelists to reply to this question, but I'm pleased in any case to give the floor for some final words from Stefano. You were, Stefano, the first to start. You will be the last to speak. And I really would like you to provide us some views in the light of the experience of the G20 presidency on how do you compare overall the European approach to the sustainable finance with those of other jurisdictions, and if you ever considered to cover under the G20 program also an important part, which is the sustainable corporate governance, which we hadn't the time to discuss this panel, but we all know that earlier this year the European Commission launched a consultation paper on this important part of the story. So you decide whether you want just to, provide us a flavor of the comparison, as I was saying, of the European approach with respect to other jurisdictions, or if you want specifically to focus instead on the sustainable corporate governance. But please, the floor is yours now.
Martina, thank you. I will be very brief because we ran out of time. And I think I can connect the two questions. So it's when we discuss about the international discussion, regional approach, and the elephant in the room is single materiality versus double materiality. I'm naming it. I think this is a dichotomy that is we can overcome this dichotomy and converge on a single basis. And it's like the whole discussion we had throughout the 20th century on stakeholder views, corporate governance, shareholder views. In the long run, what is value for shareholders is discounted cash flow, net present value of discounted cash flow. Now, if you have full information about the externalities that you are creating for the society, you need to discount those externalities in this cash flow. So saying that shareholder value does not entail what the impact of a corporation on external stakeholders is not in line with corporate finance of a well-framed shareholder value concept. So saying that single materiality does not cover also the impact of the corporation's actions on third parties, to me is a misguided way of thinking of single materiality. And this somehow leads to your question on corporate governance. It's clear that this fiduciary, this duty of disclosing the actions that a corporation has on third parties will bring about a change in the way fiduciary duties have been conceived so far. There are a number of duties towards shareholders that are not incumbent shareholders, are the shareholders that will come. There will be the next generation of shareholders. So in this way, I think that corporate governance, sustainable corporate governance will come about if we manage to turn this huge and enormous package of rules into action. The point about, so if we manage to get this package that has very ambitious, really from rules into supervision, effective way, common baseline, then board directors will have to take this into consideration. So the corporate governance change will come about in any case. I would say, this is a personal feeling, that is premature to go and tackle one other building block before having the first building block achieved.
Okay, thank you very much. I'm now leaving to the second panel to my colleague Pasquale Monafo, will be the moderator, hoping in a more, if I may say, disciplined discussion. Thank you to all the speakers.
Hello. So sorry for this delay to the speakers and to the participants. As always happens when you are following a previous panel, it's always a matter of time. So let's try to regain time during the discussion we have necessary to short the duration of this panel. So hello everyone. My name is Pasquale Monafo. I work at CONSOB, the Italian Financial Market Authority, within the International Relations Office, and I'm also the chair of the IOSCO CA on Retail Investor, which is the group that deals with investor education as its primary mandate within the organization. And among other things, has been the creator of the World Investor Week campaign in 2017. So the first panel raised a number of interesting points and consideration, giving back a picture of some of the main elements that we have to take into account when discussing about sustainable finance from a retail investor perspective, and then looking at the great opportunity and at the same time challenge that anyone as regulators, investors, market operators, and so on must face in the coming years for a transition to a desirable green economy and finance. So in this second panel, also in respect of the campaign in which this webinar is included, that is the World Investor Week. And one of the key messages of the World Investor Week is specifically dedicated to sustainable finance. We are about to discuss about the role of investor education with our distinguished speakers. We have many eminent voices coming from different contexts and perhaps, but not necessarily from different angles. It is a common belief that investor education needs a multidisciplinary perspective, if not a true holistic approach. It is, of course, challenging to cover all these aspects in depth in this panel also for a matter of time. But we think that today's debate may contribute to the general discussion about the role of investor education for sustainable finance, which is at the very beginning. So in this regard, the IOSCO C8 started a specific work stream in this area. We may say maybe a few words during the panel about it. And a media like this is a very useful source of inspiration, relevant input for our project. But now let's start with the discussion. The speakers will be introduced in order of appearance. We are going for a first round of presentation among the panelists, focused on their specific experiences and point of views with regard to investor education and sustainable finance, which will be hopefully, depending on the time left, followed by a debate driven by questions from the moderator, from the audience. So we can start with the OECD, so the global standard setter in the financial education sphere, together with Chiara Monticone, who is a senior policy analyst within the OECD Financial Education and Consumer Protection Unit and coordinates the work of the OECD International Network on Financial Education. So Chiara, the floor is yours.
Thank you very much, Pasquale, and good afternoon to everyone. It's really a pleasure to be part of this panel. So as you know, most of the work of the OECD on financial education goes through the INFE, which is the International Network on Financial Education, which has membership from more than 130 countries. So it's really a global view on financial education issues. And at the same time, we have a very broad view and work on all issues related to literacy, including also investor education. And the main piece of work that we rely upon for policy guidance is a recommendation that was adopted by the OECD Council about 1 year ago. It was the 20th October 2020. And this recommendation really sets the scene and takes stock of all the work that the OECD has done in the last 10 or 15 years on financial education. So the recommendation is very broad. It talks about national strategies for financial literacy, addressing financial literacy on a variety of financial topics and for a variety of target groups. But it's also devoted, there is also a section devoted to investments and savings, and this is where I will focus on today. Of course, the recommendation includes some very general and broad provisions related to investor education. Of course, it reminds the importance of promoting awareness of financial risks, of concepts like risk diversification, understanding the balance of risk and reward, understanding fees, charges, and interest related to financial products. Also, to promote awareness of disclosure and transparency tools, as was discussed earlier today. And it also recalls the importance of promoting an understanding among consumers of their own personal behavioral biases, which may have consequences on their ability to save, invest, or make retirement plans. So this is all very general, but of course, all of these elements are also relevant to sustainable investments, and it's important to take them into account when thinking about investor education for sustainable finance. The recommendation also touches upon more specific aspects related to sustainability, and in particular, it encourages all governments adhering to the recommendation to promote an understanding of the implications of saving and investment decisions on the society and the environment, and of the long-term economic and financial sustainability considerations in personal saving and investment decisions. So the recommendation recognizes the importance of these aspects and encourages governments or stakeholders designing financial education programs to make people aware of the implications of their decisions on the long term, on society, and on of course, this may sound very abstract and very high level, and this is why we at OECD we have decided to do more concrete work on aspects of financial education related to sustainable investments. And as often when we recommend countries to do work on financial education, one of the recommendations that we make is to start from core competencies. Start defining what we mean by financial literacy and financial education for a specific group or on a specific topic. And this is also the stance that we have taken now. So we have partnered with the European Commission, with colleagues from DG FISMA, to develop a financial competence framework for adults. There will also be a framework for young people that will come later, but for the time being, we are working on a framework for adults. And the aim of this framework is really to define which kind of competencies consumers in the EU would need to navigate the financial landscape and take decisions for themselves and for their families. So this framework builds upon an existing framework that was developed by the INFE in 2016 following a G20 call. And the idea is to update the existing framework with recent developments that are particularly relevant in the EU, and especially to highlight any competencies around issues on digital finance and sustainable finance. So this is how this framework is also interesting for today's discussion. The framework is not about sustainable finance only, but it also aims at highlighting and covering these aspects, which, as we have heard in the first panel, are becoming more and more relevant for retail investors today. So, of course, I cannot go into the details of this framework because it's still under development. But just to give you a few highlights, the framework will cover sustainability aspects related to purchases and prices, related to savings, investments, and pensions, of course, and this is probably the area that is mostly covered under sustainability. But there are also aspects related to mortgages, insurance. Of course, the framework is going to mention awareness and understanding about sustainability labels and standards without necessarily going into very detailed, very extremely detailed competencies, because the framework is aimed for all consumers and all investors. But it will also, of course, mention the need to understand and be aware of risk of greenwashing, and to have a broader understanding of the sustainability of personal finance decisions. So in a nutshell, this is what we are planning to do. As I said, there is going to be a follow-up framework on young people, which will also cover these elements, and I think it would be especially relevant for them to have these elements mentioned. And the final consideration is that, of course, in doing this exercise, I've heard many speakers in the first panel mention investor education is very important in this respect. And it's true, but at the same time, as we develop this framework, we also need to take into consideration that consumers cannot be given the responsibility of knowing and understanding everything. Sustainability investments in general are a particularly complex element within the financial literacy spectrum, and sustainable finance is even more complex than investments in general, for all the reasons that were discussed before: many labels, many standards, risks of greenwashing. So, of course, it's important to list competencies for consumers, but at the same time, there are many aspects that need to be taken into account from a regulatory point of view first. And with this, I would give back the floor to the chair. Thank you very much.
So thank you very much, Chiara. So we can then move to Anna Maria Lusardi, who is a university professor of economics and accountancy at the George Washington University School of Business, and also director of the Global Financial Literacy Excellence Center and of the Italian Financial Education Committee. She's a well-known celebrity, I would say, on the field of financial literacy. So Anna Maria, I hand over to you.
Thank you very much, Pasquale. I'm really delighted to be here today, and in particular to speak about such an important topic like investor education, and really the topic of assessing the knowledge of investor, thinking about financial education for them, and so on. I'm really coming to you with two hats today, which is both as an academic, but also as director of this financial education committee set up in Italy. And very proud to say that October has been launched as Financial Literacy Month in Italy. And we chose October also because of the World Investor Week, which is always the first week of October. So we could combine both events, and very happy that this event also part of the Financial Literacy Month in Italy. And the month is so busy that we have more than 700 events. And even today, I'm here at the Bank of Italy. This is why this background at the G20 conference on the Global Partnership for Financial Inclusion, where there is also a discussion again of financial literacy and financial education. What I would like to do, first of all, I want to say I'm so happy to come after the speech of Chiara from the OECD, because the OECD has done so much to frame this problem, to collect data, to inform policymakers. Their work is truly visionary, and I think we have learned so much from them, including their continuous suggestions that we need to consider all of the parts that need to be brought together when we think of how people make financial decisions. And given their important work, and given also the warning about how can we help investors, I would like to talk today and give you in these few minutes a little bit of the new finding from a couple of new reports, which are so preliminary that I cannot really say a lot about it. But I'd like to speak a little bit more, for example, about ESG literacy. As Chiara has said, for example, these are topics that can be even more difficult for investors to understand, and these are very new. What I'd like to do, and you can go to the next slide, is to speak about two reports that we have been doing. And the motivation on this report is obvious. ESG is so important, it's growing all the time. Young investors are particularly interested in investing, and also ESG investing is already the norm in several markets. And when we ask investors why they are interested about this, they do mention that they do want to invest in something that has a positive contribution to society, but many of them do not think that necessarily there is potentially also a higher return connected to investing in ESG, which eventually, potentially in the long term, might even bring higher return. So what we did, you can go to the next slide. We have collected data together with researchers at the Singapore Management University in Singapore, and we have collected data in the US and Singapore looking at ESG knowledge and interest in investing in ESG among